Hello everyone, I'm Walter Ledger, and today I want to talk about something that makes even the most enthusiastic cryptocurrency supporters uncomfortable. Scams. Big ones. The kind that make Bernie Madoff look like a pickpocket. Now, I want to be clear up front. We're going to look at 5 massive frauds that together stole over $60 billion. That's not a typo. 60 billion. With a B. That's more than the GDP of many small countries. But here's why I'm showing you this. Does the existence of these scams mean cryptocurrency itself is fraudulent? No more than Bernie Madoff's Ponzi scheme proved the stock market is a scam, but it does mean you need to know what you're dealing with. So let's dive into the 5 biggest frauds in crypto history, presented in what I'm calling my Rogues Gallery. Let's start with the most audacious fraud I've ever seen. Meet Dr. Ruja Ignatova, who called herself the Cryptoqueen. From 2014 to 2017, she traveled the world in private jets, speaking at packed arenas, convincing people across 175 countries that they were investing in the next Bitcoin. The problem? There was no cryptocurrency. Not a blockchain, not a coin, nothing. It was smoke, mirrors, and extremely good marketing. She stole between $4 and $5 billion running a classic Ponzi scheme, just dressed up with blockchain buzzwords. Now here's where it gets really interesting. In 2017, just as U.S. authorities were closing in, Dr. Ruja boards a flight from Bulgaria to Greece and vanishes. Gone. Like a ghost. She hasn't been seen since. She's now the only woman on the FBI's 10 most wanted list, with a $5 million reward for her capture. Her brother cooperated and got time served. Her lawyer got 20 years. But Dr. Ruja, still out there somewhere, possibly with a new face, definitely with billions of dollars. Victim recovery? Minimal to none. The lesson: if someone can't show you actual verifiable blockchain technology, run. This one really stings because FTX was supposed to be one of the good guys. Sam Bankman-Fried wasn't hiding in shadows. He was testifying before Congress, appearing in Super Bowl commercials, pledging to donate his wealth to charity. He looked like the responsible adult in the room. Behind the scenes, he was running FTX like his personal piggy bank. $8 billion. That's what he took from customers. He secretly funneled customer deposits to his trading firm for incredibly risky investments, political donations, and real estate in the Bahamas. When crypto prices crashed in 2022, there was suddenly a massive hole in FTX's balance sheet. When customers tried to withdraw their money, surprise, it wasn't there. The whole thing collapsed in days in November 2022. The good news, if you can call it that, is that justice was swift. Sam Bankman-Fried was convicted on 7 counts and sentenced to 25 years in federal prison in March 2024. And here's the interesting part. Customers might actually get most of their money back, though valued at 2022 prices, meaning they'll miss out on any gains Bitcoin has made since. The lesson? Even regulated exchanges with celebrity endorsements can be fraudulent. Bernie Madoff had impeccable credentials too. Now we're talking about the biggest loss of them all. $40 billion. Billion. Do Kwon created what's called an algorithmic stablecoin, a digital currency that was supposed to maintain a $1 value through complex mechanisms. He promised 20% yields. If that sounds too good to be true, that's because it was. In May 2022, the whole system collapsed in what's called a death spiral. Luna went from $80 to fractions of a cent in just days. The stablecoin UST went from $1 to pennies. $40 billion in value, just gone. Evaporated. Do Kwon fled to Singapore, then Serbia, then Montenegro, where he was caught using a fake passport in March 2023. After months of legal battles, he was extradited to the U.S. and pleaded guilty in August 2025. Here's what makes this different from traditional scams. The money wasn't stolen and hidden. It was destroyed. When a token goes from $80 to essentially zero, there's nothing left to recover. Victim recovery? Essentially zero. The lesson: if someone promises 20% returns in a near-zero interest rate environment and you can't understand exactly how it works, walk away. The lesson? Even regulated exchanges with celebrity endorsements can be fraudulent. Bernie Madoff had impeccable credentials too. If you've been around crypto spaces, you've probably seen the meme, a promoter literally screaming BITCONNNNNNECT at a cheering crowd. It's become a symbol of crypto excess and fraud. BITCONNNNNNECT promised up to 1% daily returns through a trading bot. Let's do the math. 1% daily is 365% annually, or much more with compounding. If such a system existed, they wouldn't need your money. They'd use it themselves. It was a classic Ponzi scheme with a pyramid recruitment structure bolted on. The whole thing shut down in January 2018 after regulators sent cease and desist letters. The token plummeted from $370 to under $1 overnight. $2.4 billion stolen. The founder, Satish Kumbhani, was indicted in 2022 but remains a fugitive. The top U.S. promoter pleaded guilty and was sentenced to prison. Victim recovery? $17 million recovered out of $2.4 billion lost. That's less than 1%. The lesson? Guaranteed daily returns of 1%. That's not a business model. That's a crime in progress. Celsius promised to help you unbank yourself while offering yields up to 18% on crypto deposits. Their CEO, Alex Mashinsky, promoted it as safer than traditional banks while secretly engaging in extremely risky investments. When crypto prices fell in 2022, Celsius had a $1.2 billion hole in its balance sheet. But here's the kicker. Mashinsky kept promoting the platform and encouraging deposits even while it was insolvent. He even withdrew $10 million for himself before freezing customer withdrawals. Celsius collapsed in June 2022. Mashinsky was arrested in July 2023, pleaded guilty in December 2024, and was sentenced to 12 years in prison in 2025. Customer recovery? Partial, through bankruptcy proceedings, but many people will take significant losses. The lesson? When someone promises 18% returns while traditional banks pay 0.1%, ask yourself, where is that money coming from and what risks are being taken? The answer here was, extremely risky investments that can wipe out your funds. Here's what you need to take away from this tour of crypto's most wanted. First, high returns equal high risk or fraud. If someone promises guaranteed returns well above market rates, that's your signal to leave immediately. Second, verify, don't trust. Celebrity endorsements, congressional testimonies, fancy offices, none of that means anything. Bernie Madoff had all of that too. Third, if you can't understand how returns are generated, don't invest. Complex explanations often hide simple frauds. Fourth, not your keys, not your coins. Keeping large amounts on exchanges exposes you to fraud risk. Use hardware wallets for long-term storage. Fifth, watch for cult-like behavior. Aggressive marketing, promises of wealth, and discouragement of skepticism. These are massive red flags. Let me leave you with this. Does crypto fraud exist? Absolutely. We just looked at $60 billion worth. Does this mean crypto itself is a scam? No more than counterfeit bills make the dollar worthless. Here's the ironic truth. Bitcoin itself, the original cryptocurrency, hasn't been the vehicle for these major scams. The fraud came from people building schemes around crypto, exploiting people's lack of knowledge and their greed. So, should you be cautious about cryptocurrency? Always. Extraordinarily cautious. Should you never invest more than you can afford to lose completely? Absolutely. But should you write off the entire concept because scams exist? That's like saying you'll never use email because Nigerian prince scams exist. Stay skeptical, stay informed, and remember, if someone promises you guaranteed riches in cryptocurrency, they're either ignorant or lying. Neither one should have access to your money. Thank you. Now, before we wrap up, I want to leave you with something important. If our discussion about Bitcoin and cryptocurrency has sparked your curiosity, and I hope it has, then you're probably wondering, Walter, where do I go from here? Well, I've got two suggestions for you, and neither one involves jumping into some get-rich-quick scheme or following the advice of someone on TikTok who looks like they're barely old enough to vote. First, if you want to stay current with what's happening in the cryptocurrency world, and trust me, things change fast in this space. I write a weekly blog at over50crypto.com. That's over50crypto.com. Every week I break down the latest developments in plain English. No hype, no promises of Lamborghinis, just honest analysis from someone who's seen enough market cycles to know what actually matters. But if you really want to master this subject, and I mean truly understand it from the ground up, then I've written the complete guide. It's called Bitcoin and Beyond, a guide for people who remember when phones had cords, and you can find it on Amazon. Link in the description below. Now, why did I write this book? Because most cryptocurrency content out there is written by 20-somethings for 20-somethings. It's full of jargon, assumptions, and frankly, a lot of breathless excitement that doesn't help you make sound financial decisions. My book is different. It's written specifically for experienced adults who want real knowledge, not get-rich-quick fantasies. In it, you'll find everything we talked about today and much more. Step-by-step wallet setup, how to make your first purchase safely, tax implications explained in simple terms, and advanced strategies for integrating cryptocurrency into your existing portfolio, if that's what you decide to do. Remember, whether you decide cryptocurrency is right for you or not, making that decision with real knowledge is always better than guessing. So visit over50crypto.com for ongoing education, or grab the book on Amazon for the complete deep dive. Either way, thank you for your time today, and remember, the best investment you can make is in your own understanding.